stocks swing between gains and losses. Healthcare is the big loser, but consumer durables hold their ground. Mid-caps see volatile trade. Reliance clinches a landmark deal with Disney, valuing Disney's India business at near $3 billion against earlier estimates of up to $15 billion. The Reliance-controlled joint venture combining the media assets of Viacom18 and Star India is valued at over 70,000 crore rupees and is expected to accord it a dominant position in the media and entertainment sector. The Association of Mutual Funds of India issues an advisory to AMCs asking them to disclose results of liquidity stress tests and other risk parameters of mid and small cap funds on a monthly basis starting the 15th of March. AMFI has also provided a methodology for calculating the number of days needed to liquidate chunks of the portfolio. A Supreme Court warning to the centre over non-implementation of standard rates for healthcare procedures spooks the street. Newly listed GPT Healthcare tells CNBC-TV18 they hope to find a solution with the centre. And the DPIIT Secretary Rajesh Kumar Singh tells CNBC-TV18 they are working with the RBI to help fintechs with compliance. This even as he states that Paytm Payments Bank was given adequate opportunity to comply. Good afternoon and welcome to Business Lunch. I'm Pavitra. Those are the top headlines that we're tracking for you this afternoon. There is a lot of news flow today. But for the markets, it's been, swinging between the gains and losses. Right now, it's absolutely at that flat line at 21,950. That's where we're at on the index. Of course, right now, the second half could see some more volatility considering that it is also expiry. So we'll have to see how that plays out. But for the market, from the lows, we've recovered a fair deal, around 0.6% for the Nifty. Banks are also back in the green. So the Nifty banking index has recovered around 0.8% from the lows. And you're seeing that similar recovery play out in the small caps, mid caps as well. In fact, both of those indices, the small and mid caps, have picked up around 1% from the lows of the day as well. So very flat, just seeing a little bit of red on the broader markets. The advanced decline is still in favor of the declines. So you have around 900 stocks advancing for around 1,200, around 1,300, which are in the red right now. What's not doing so well today, you have, some of the tech stocks, so the larger ones like TCS, LTI, Tech Mahindra, these ones seeing some cuts. Autos are very split, so you have Bajaj and Eicher, which are in the red, but on the other hand, you have Maruti and M&M, which are being able to hold up quite well. And you also have Reliance, which is in focus on the back of that big deal that we spoke about. It was trading well in the green. It has come off from those levels a little bit, but of course, that stock also continues to stay in focus. It is still holding up with around 0.3% in terms of a gain. In fact, that is our big story on Business Lunch today. So let's talk about that because Reliance has clinched a mega deal in the entertainment space. They've entered into a 70,000 crore rupee JV with Disney that combines the media businesses of Viacom18 and Star India. So Nisha is here with all of the details. Nisha.
It's a big deal. Largest media and entertainment company is in the making with giants Reliance Industries and Walt Disney striking a deal to form a strategic joint venture to create an $8.5 billion media behemoth. Reliance, with Viacom18, will own the controlling stake in the JV, with Disney owning around 36%. Now, Reliance Industries will also pump in a whopping $1.4 billion into the joint venture company, which is getting created. Now, leadership to include Neeta Ambani as the chairperson and Uday Shankar, the erstwhile head of Star India, remember, is going to be the vice chairperson of this company. Now, transaction is expected to be completed by end of 2024 or early 25. Deal structure, that includes Viacom18 to be merged into Star India, and Viacom, remember, is a subsidiary of the Network 18, a listed media company of Reliance Industries. Earlier, the company had announced a consolidation of TV18 with Network 18. Now, on a fully diluted basis, the Viacom18 shareholding looks like this. Reliance Industries owns 57.7% stake, TV18 at 13.5% stake, while Paramount and Bodhi Tree have minority stake. Remember, Bodhi Tree is owned by James Murdoch and Uday Shankar. Now, it's a combined power to form the largest media company with a combined revenue of 25,000 crores. With over 100 channels, streaming platforms with impressive international catalog, and the largest sports offering from domestic to international sporting event rights. Now, this also means around 40% market share in TV and streaming, which Competition Commission of India is likely to scrutinize. So, the regulator's approval will be crucial for this transaction. It will also put the heat on the competing media companies. And in the listed space, we have Zee Entertainment and Sun TV. Now, the combined company with the revenues of 25,000 crore rupees will be bigger than any other media player in the country by a huge margin. And also remember, the largest company takes a bulk of the revenues as well as the profit pool in the media and entertainment space. Remember, capturing and controlling the advertisement share. Even in telecom, not just in media, the competition is intense for content play, and content play of Jio's bundled services will intensify this competition for other telecom major to be watched out for. Now, as far as the brokerage views are concerned, Jeffrey says that the transaction adds 40 rupees per share to Reliance Industries' sum of the parts from media. Morgan Stanley adds 2 to 3% to RIL's base case NAV. Now, to end with Mukesh Ambani's quote on the announcement of this big deal, he calls it a new era in the Indian entertainment industry.
All right, Nisha, thanks a lot for that. Truly a Goliath in the making. But, you know, on this, we spoke to a whole host of experts. So let's hear out what they have to say on this big sort of merger that has come through.
You know, everybody's only talking about the Indian market, but if they come together with Hulu, Disney, JioCinema, Woot, all put together, I think there's a huge opportunity for them to go international as well. I think the small players are going to get hurt, whether you like it or not, because the cost of content is only going up. And in the television space, you know, we all only look at streaming. Everybody's only about streaming. But the fact is that between Disney Star, they are a huge player in the television space. So is Viacom 18 in the television space. I think there they, to a large extent, they'll have a huge market share. So that's one. And both are into regional as well. So it will definitely in some way or the other impact regional players in the television space. I think advertising in India has always been, I know my friends in advertising will not like me saying this, but you know, it hasn't actually been, I think we are under-indexed. I think there is an opportunity, and this will definitely help advertising go up.
Definitely for Zee and Sun TV, the listed entities, this is negative because they will become 1/3 or 1/5 the size of this merged entity, which will be 25,000 crore versus that rest of the players are much smaller. And we also need to see that the sports, which has been a big loss-making business for Hotstar, my sense is long-term it will become profitable because now both digital and TV rights will be controlled by this entity. So a lot of positives. I think in media, winner takes it all, and this will become the big daddy of Indian media. So negative for other players.
All right, that is on the Reliance and Disney deal. But moving on now, some more important news. The NSE has announced index rejigs, which are set to come into effect from the 20th of March. So Shriram Finance will replace UPL in the Nifty 50. And Novama estimates that UPL could see outflows of about $100 million, while Shriram Finance may see inflows of around $270 million. Some more changes: Jio Financial, REC, PFC and Adani Power, as well as IRFC are also set to be included in the Nifty Next 50 index, while the exclusions from that index are Shriram Finance, PI Industries, PNG Health, Muthoot Finance and Adani Wilmar. So those are all of the important index changes that have been announced from 28th of March. But with that, we're going to get into a short break. On the other side, we're going to bring you all of the expectations ahead of the release of the third quarter GDP numbers today. Stay tuned. We'll be back at 2. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18. Now, the government will announce the Q3 GDP data today. So, Lata is here with us to tell us what we can really expect this time around. Lata.
Well, the government does announce the Q3 GDP and the full year advance estimate, the second advance estimate, but it also revises a lot of previous year numbers. But the most important number will be the Q3 GDP number. CNBC-TV18 poll expects that the Q3 GDP will come at 6.7%. Distinctly lower than the Q2 number, 7.6, very strong. And the 6.7 is also because it was a weak base. So let's not run away with the idea it's an extremely strong number. The breakup is agriculture is likely to be only 1.3%. We know it's an El Nino year. Industry and services will make up with a 7.6% and a 7.3%. This is the CNBC-TV18 poll. More important will be the second advance estimate of the full year. You know, the first advance estimate comes on in January. This is the second advance estimate. The NSO had forecast GDP at 7.3. The RBI almost endorsed it. But bulk of the economists whom we polled believe that it will not get to 7.3. Now, whether the NSO will see it as early as now, one doesn't know. But most of the economists are not very sure that we will manage up to 7.3. But let's see. The important point is the revisions. The third revision of FY21, the second revision of FY22 and the first revision of FY23 will also be announced. These are the latest numbers available from the previous GDP revisions, and this is the actual GDP number adjusted for, take away the price effect. These are the real GDP numbers. Now, because of the revision, if any of these numbers change, then the base effect can give a very different full year GDP number. So that is a caveat for all the polls.
All right, Lata, thanks a lot for taking us through all of those estimates and all of those numbers. But with that, let's also move on and bring you some excerpts from our conversation with Rajesh Singh, the Secretary of the Department of Promotion of Industry and Trade. Speaking to Shireen, the DPIIT Secretary gave his views on the lower FDI inflows last year and the promise that India holds as an investment destination. Listen in.
If you see it as a percentage of our GDP, you'll find that in 2014, we were at about 2.6% of the GDP. In the next 5 years, it became about 3.5%. Now it is close to 4%. There is a slight dip in the current year, which we feel is due to a combination of geopolitical factors, hardening of interest rates abroad, due to the sticky inflation conditions in some of the developed countries. So there is a slight dip this year. The dip is far less in India as compared to many of the other competing destinations. But from the Government of India's point of view, the real issue is that in terms of overall FDI flows, we are 8th in the world. We should be going up. Most of the 7 who are ahead of us are developed countries, but there are 1 or 2 developing countries in that list. Our intention is to sort of really move up there, because this is the time when the world is looking at India. By all accounts, we provide a fairly sort of clear case for investment in terms of the both the policy stability and continuity, as well as the political stability and the macroeconomic numbers that India has. So it's a compelling case for FDI, and we are very confident that the trend I mentioned of an increasing portion of our GDP coming in as FDI will continue.
All right. Shireen also asked about the DPIIT Secretary about the recent news regarding Paytm Payments Bank and the efforts taken by the government in order to really ensure that startups comply with law. So listen in to what he had to say on that as well.
You said that the effort on the part of the government or the regulator is not to penalize, but in this case specifically, the regulator said enough and more opportunities were given for compliance, and the action was taken because there was perpetual non-compliance. So what was the feedback that you got? I mean, is it because of the complexity of the kind of rules that are in place that fintechs seem to find it challenging to comply, or is it a lack of understanding, or is it a lack of appreciation of what the regulator expects in terms of good compliance?
So, I mean, when it comes to startups, of course, these are people who often move very fast, whose business has expanded suddenly. And sometimes the compliance portion of it is perhaps not taken as seriously in some cases. The specific case that you mentioned, I don't want to spend time on that so much because I really don't know the details of that particular issue. But I understand that they were given adequate opportunities. The general sort of impression that we got from the fintech companies who attended that meeting was that they would like to understand the regulations better, which of course we created a mechanism for that purpose on the spot by the Honorable Finance Minister for a monthly meeting to update them and sensitize them about regulations.
All right, that is the view on Paytm, saying that they were given enough time to really comply and that this decision is also for other startups. But moving on now, there is more from this interview. He also spoke to Shireen about reduction in tariffs for companies like Tesla, like VinFast, who are really looking to come into India and then set up shop. Listen in.
Demand from a lot of the global manufacturers, or in particular one global manufacturer, is that, look, don't mandate to start with domestic manufacturing, bring down tariffs, let us import at a lower duty and then get demand visibility before we actually set up domestic manufacturing. What's the DPIIT view on this?
Actually, it's not a single manufacturer anymore. Now there are two of them, and I won't mention who those two are, but yeah.
We know one.
Yeah, so you can try and guess the other one. So, as I said, there are a couple of requests on those lines. It's a very contested sort of policy space because we have a strong domestic automobile sector, which also has investment plans in this area. So I would only say at this stage that government has not taken a final view on this as to how to do it, how to sort of, do this trade-off which will have some disruptive impact, but which also has some, there are benefits and costs in going down that route, and government really hasn't taken a final call on this as yet.
All right, those are some interesting excerpts from the conversation with the DPIIT secretary. The market, by the way, is back in the green. It's been an over 105-point recovery from the lows of the day. We are going to get into a short break, but there's lots more news and updates coming up in just a bit, so stay with us. Welcome back. You're still tuned into Business Lunch. Now, an important story. The 13th WTO Ministerial Conference concludes today in Abu Dhabi. On the last day of the conference, the Indian government expects the outcome document to really cut costs of cross-border remittances. So Abhimanyu is joining us to fill us in with all of the details and the impact that this could have. Abhimanyu.
India is hopeful that the WTO outcome document may reduce the cost of remittances from developed countries to developing and lesser developed countries. Now, India's proposal to ensure a lower tax and lower cost for remittances from developed countries is facing opposition from the European Union. The proposal is being backed by lesser developed countries and developing countries, and the EU's counter proposal is something which India is skeptical of. According to Indian government sources, there are fears that EU's proposal may keep the cost of remittances extremely high, since it's usually the developing and lesser developed countries which are the recipient of remittances up to 70%. Now, notably, a recent World Bank report had indicated that India was the largest recipient of global remittances in 2023. So clearly, any such outcome would be in favor of India. So it's a wait-and-watch situation as far as the WTO ministerial's final day is concerned at Abu Dhabi.
All right, thanks a lot for that. But Abhimanyu, stay on, because we also understand that there will be discussions on the extension of the e-commerce moratorium. So tell us more about that too.
It's the final day of the WTO Ministerial Conference here in Abu Dhabi, and among the likely issues which are possibly going to be discussed out here is the issue of e-commerce moratorium. Now, the moratorium is slated to end by the 31st of March this year if there is no decision taken in the outcome document of the current ministerial. India, in all likelihood, is going to oppose any extension to the moratorium. India, along with several other developing countries, is opposing any degree of extension to the moratorium. It has said that it's ready for talks on the issue, but it does not want any extension as far as this issue is concerned. India has opposed extension to get policy space in the domain. That's what government sources have indicated so far. And India is also opposing an ITA-like arrangement on e-commerce moratorium. So clearly, India's stand is being backed by several other developing countries, and it's likely that discussions are going to heat up as far as this issue is concerned. India has also said that while it's being asked several tough questions on this issue by several developed countries, India gave a counter question that no questions are being asked, on the other hand, to countries who have been blocking appointments to the global appellate body at the WTO. So it's likely that tough discussions and negotiations are going to take place on the issue of e-commerce moratorium.
All right, Abhimanyu, thanks a lot for filling us in with the details on both of these important pieces. But with that, let's move on because the Anant Ambani and Radhika Merchant's pre-wedding event has begun in Jamnagar. Over 1,000 guests will attend the 3-day festivities at the Reliance Greens complex in Jamnagar. Now, the couple's pre-wedding festivities commenced with an Anaseva where Anant and Radhika actively participated in serving food to the local villagers. Akash Ambani, along with wife Shloka, have arrived. From the Indian film industry, Salman Khan and Arjun Kapoor have also made their way to the grand venue. Ranbir Kapoor and Alia Bhatt are also on their way to Jamnagar. And the celebration, remember, will feature performances by pop star Rihanna, Punjabi singer Diljit Dosanjh. Besides Meta's Mark Zuckerberg and Disney's Bob Iger, a lot of other business leaders are also going to be attending this mega event in Jamnagar. And the celebration, they include Sundar Pichai, Larry Fink of BlackRock, and Shantanu Narayan of Adobe. All right, so those are all of the visuals. But with that, we're going to wind down on this edition of Business Lunch with the news that the market has recovered a fair deal, around 20 points in the green right now. Mid-caps also have broken into the green, and the bank Nifty is up 130 points. Thanks for tuning in. We have Mid-Cap Radar on the other side.